and welcome to your weekly US markets review brought to you by SG Futures. Coming at you a little bit later this week due to President's Day on Monday the 15th of February. So starting this week, as we always do, we are on our daily RTH candlestick chart on the E-Mini S&P. And I will just start by marking off the week that was, which is just in here. So we have starting on Monday the 8th, Tuesday the 9th, Wednesday the 10th, Thursday the 11th, Friday the 12th. We can ignore this little bit up here. That is just a little bit of the Globex chart that is printed up there today, which we will get back to. But really last week, what we saw over the course of the week was an acceptance of this break higher from the previous week. If you remember, we spoke about in the last video was this candle on the Friday, which is this little red hammer candle. Let me just remove this drawing and we'll see it. It's this little hammer candle in here in red, and it was a break above from the Thursday price action. We broke above a key level, which was the 38.80, and we sort of chopped around and closed just below where we opened. And given how the trade played out last week, we had really an acceptance that this break higher was agreeable between buyers and sellers, and that new higher prices were being accepted. And anytime we tested some of these levels, like the 38.80 from above, we had confirmation that lower prices weren't deemed to be acceptable within the market, and we retraced back into the balance zone, which is really incredibly bullish. On the Friday, which is a really interesting day in that we sort of chopped around for most of the day on Friday, and then really when we approached the settlement period, so with 30 minutes to go in the session, we had a huge price exploration higher. And there are some parties out there who say that this was due to maybe some call options expiring, but really this is a proper price exploration. Price rose higher along with some pretty key stocks in the E-Mini S&P, and we closed on all-time highs. And what this tells us when this happens in the run-up to the close, and today was a little bit of a giveaway in the Globex session, was confirmation of a couple of things. That when you get this break higher very late in the day and into settlement, often what we could think of when the market's closed is that the market just ran out of time, or the traders just ran out of time, and if the market had been open a bit longer, the price may have gone even further. So that was one of the things we were thinking about today when we were looking at the Globex period, which was trading today. So as you can see in this little candle up here, just due to the time frames of my chart, it's only capturing a small part of this, but the Globex of the futures have basically confirmed that this move higher was acceptable, and the market is pretty much chopped around between the 39.50 level and 39.60 level for most of the day. It was pretty much a sideways day with very low volume, but it is confirmation that even in the Globex outside of regular trading hours time, that these new prices are acceptable. The fact that we've broken higher above this price expiration on Friday is extremely bullish. So this is confirmation that our bullish narrative is still relatively intact as we move into the RTH session tomorrow. We're quite a bit extended from the 20-day moving average, which is down here in purple. So again, we might see a little bit of chop at these high prices up here, allowing the 20-day moving average, which is a lagging indicator, to catch up somewhat and close the gap between the price action and that moving average. So that's immediately as we come in this week. They are our immediate thoughts on where we think the market is going to go. What is significant is, I will just mark it out again, is this whole week was a period of balance in that we had a low, we traded to a high, a low, and then back to a high again, and then we broke out in settlement, which we will see in more detail in the profile chart. So really what we will be interested in this week is, again, this period of balance up here. So if we were to mark it out properly, like this, these would be some levels that we will be looking at. So we would be looking at the sort of 39.26 level, would be a pretty key level. So we'll be looking at the 39.26 level as being the top end of that balance, probably somewhere around the middle, 39.05, 39.03, which we noted as a pretty key level last week, and then the low, which would take us down to, again, that key level we mentioned previously, which is the 38.80. So they are sort of our power lines that we're going to be looking at this week. And if we do try and get back into this area. How does the price action react? Does it bounce off it? If it bounces off it, it's potentially a good buying opportunity. If it retraces back in, then we target the middle half of balance, and then if it breaks below further, we test the lower end of balance. So that's immediately our plan coming into this week. Now, when we look at this in the weekly view of the profile, which I'll just jump across to now, I will mark off our weekly distribution. And what we have here is a really nice weekly distribution, in that this is almost a perfect distribution, or a perfect bell curve that we seen printed last week. It was a very tight range for the week that was in it, but again, you can see when we map it back to the previous week, which is in here, now forgive all the boxes on the screen, is that we are probably 1/3 the range of what we had the previous 2 weeks. So it's a real consolidation of price action up here. But what we can say is that we had no firm interest in going back into the previous week's range in the profile. In fact, the low that was printed was really just a couple of handles below the previous week's value area high, and also the key level which we've marked out in our chart as 38.80. So that represented a couple of good buying opportunities over the course of last week. What we have seen this week is, previously we had 3 weeks of overlapping value, so that was this week, and this week, where we had value overlapping, and that's confirmation that higher prices that broke from this green box down here were now acceptable, and the buyers and sellers were happy with the move higher in price action. What we saw last week was again a value break, so value has migrated much higher and it is no longer overlapping. So the value area is just marked out in here in the grey TPOs in there. So that is again something that we will really look to note. And again, what we've seen is the value area low from last week is in and around the high from the previous week. So these are significant levels that we would look at coming into this week. So if we did retrace back down here, we would look at the previous week's high for sure at the 38.88, the value area low from last week at 38.90. So that represents a really interesting area that if price retrace back in there, how does it behave? If it bounces straight off it and it's incredibly bullish, then maybe there's a buy signal in there. But if it doesn't and it retraces back into the previous week's profile, it targets these set of single prints in here, which I'm just going to shade in green. So that's an area that again we would look at, and that would be the trigger for that would be based on a break below the 38.80. Now, if we got a break below the 38.80, I would look for a break lower, maybe a retracement back up towards the 38.80 from below, and then selling the 38.80 with a view to targeting some of these downside levels in here. And that'll be potentially a swing trade we might see if we were to get back into these areas up here. But currently, as you see here, we closed at pretty much all-time highs last Friday. We've had a Globex market today, which has gapped up again and has closed at 39.50. Really, 4,000 is in range right now, and that's the next round number that we could see even tagged in a daily trading session at this stage. So that could be something that's on deck this week. Let's have a quick look at the daily profile, so we can see over the course of last week, starting here on Monday. And what we see here, when we mentioned that last week was a full period of balance, we have confirmation of it in here, in that we pretty much have overlapping value on Monday, Tuesday, Wednesday, Thursday, and Friday. So that is confirmation and acceptance of these new higher prices based on the previous break higher from this green box here. One of the things that's really interesting to note, and it's not hugely relevant, but it's interesting to note, is that we closed pretty much in and around the same price 4 days in a row. So the 39.08. So that's just an interesting nuance that we've seen over the course of this week. But we can see here we had this expiration spike on Wednesday where we came down and we tested the 38.80, and that probably represented the biggest buying opportunity over the course of the week that was. Another tell that we were due to go higher on Friday when we came in was that the price action on Thursday came down, but it didn't take out Wednesday's low, and it actually came down and tagged the value area low from Friday the 5th of February, which was also the close of that particular day at 38.84, but the market couldn't get down below the 38.80, and that's a tell. That's a tell that we have failed down at these low prices. We've made an attempt to get lower, and the sellers couldn't take it lower. Buyers stepped in and have driven the price higher. And when we fail at the lows of a balance area that was printed over 4 days, we immediately target the midpoint, which would be in around the sort of 39.03 to 39.05. And if we break higher again, then we target the top end of balance, which was around the 39.26 level. And that's what we saw on Friday with that price expiration higher. So coming in this week, really we're a little bit ahead of the curve in what is a shortened week, in that we've seen how the futures have opened, and we can see that price has broken above the previous week's balance area and the previous week's range, which tells us that the market is incredibly bullish. There's an awful lot of FOMO going on. The market feels quite frothy, but this is really just going to steamroll its way all the way up to 4,000, barring any crazy negative news that drags the market lower. So just to recap, for us this week, what we will look for is any sort of a retrace back into this particular zone. And here we will have 39.26 or 39.25 as an area we're interested in if price gets down here. Really at this point, the way the market is so bullish, we'd be pretty reluctant to sell anything on any kind of a swing trade. So we're really going to be looking to try and buy dips. So if we're looking to buy dips, we want to see a dip back into this balance area around 39.25 to 39.26. See how the market responds. Typically you would see on a first touch that we might see some sort of a rebound. So that would be, for me, that would be an instant buy to see if we can then take that higher back out of the balance zone. Now if we break into the balance zone, we target the midpoint, and the midpoint is in and around the 39.03. So if we broke in here, I would look for a break out above and fail, and if it fails, then it would take the short around 39.26 with a target of 39.03 to the downside, and further target of 38.80 to the downside. So that's kind of the plan as we come in this week. Don't see us getting back into this balance area, to be honest, based on what we've seen today, but never say never in the markets. Just while we're here, let's have a quick look at the other indices. So we will have a quick look at the Nasdaq, and Nasdaq has been really nice grind higher in a really nice channel over the last sort of week to 10 days. And again, a break higher in the Globex today, so no real change there. Still not too far away from the 20-day moving average. This market looks pretty healthy. There's nothing really stopping this from showing some continuation into the future, into 14,000 and above. But really the main leader across all of the main US majors at the moment is the Russell 2000. What's interesting is that we talked last week in our video last week that we were getting quite extended away from the 20-day moving average, but really we had a nice period of balance over the course of the last week. That's this box in here, and it's allowed the 20-day moving average to catch up somewhat. One of the things that is interesting, which we will carry forward, is that today's trade on Globex in here did not break out of the balance, whereas the other markets did. So that's something we will keep an eye on. The Russell's really been leading the way over the last few weeks. So again, if we see any weakness in the Russell or a retracement of this balance area, it could be a clue that we may be about to trigger a sell-off in the other indices. So we'll definitely be keeping an eye on the RUT. So that's pretty much it from us this week. Business as usual, as we've seen over the last number of weeks. The narrative hasn't changed in any significant way. As always, if you want to learn more about market profile, visit our website at sgfutures.com/education. Otherwise, have a great week and stay safe out there.